Hello and welcome to SDG Live at the World Economic Forum in Davos. My name is Stephen Keppel. I'm the Vice President for Social Impact at Univision, and I'm joined here by Tim Murphy, who's the General Counsel and Chief Franchise Officer at MasterCard.
Good morning.
Tim, thanks for being here. We're going to chat a little bit about financial inclusion and the Sustainable Development Goals, the SDGs. But maybe first, Tim, tell us a little bit about your role at MasterCard and some of the projects that you're focused on.
Sure. So I'm MasterCard's General Counsel, but I also have responsibility for something called our Center for Inclusive Growth. Our company has set a very strong agenda in the inclusive growth space. For 50 years, MasterCard's represented access to financial services for people who have bank accounts. And we see a huge opportunity both to make the world a better place, but also, frankly, to build future businesses in terms of bringing the excluded into the financial mainstream. 2 billion people around the world today don't have access to basic financial services. We know payments are a huge on-ramp, not the only one, but a huge on-ramp to financial services. We made a commitment as part of the SDGs to bank 500 million new consumers by 2020. We're well on our way with access to now over 300 million consumers with programs that we've worked on around the world, 1,300 programs, 60 governments, and so it's a huge part of our business. A lot of it is commercial, so it's important that these are commercial solutions where companies in providing services can earn revenue. But a fair amount of work that we do is non-commercial, and the Center for Inclusive Growth that I talked about is really where all our non-commercial, if you will, charitable and collaborative efforts to help drive inclusive growth sit. Very much focused on bringing, as I said, financial services into the developing world, but then also helping economies like the US and Europe figure out how we manage through this extraordinary digital revolution that's facing us in terms of gig economy and all those issues. So I'm wrapped up in a bunch of that, and it's an incredibly interesting part of my role.
Interesting, very cool. So I think financial inclusion we see as definitely playing a big role in ending poverty, which is one of the main goals of the SDGs. Talk a little bit about how the SDGs have framed MasterCard's social impact work.
Sure. So I think we have looked at the SDGs and we've identified 5 or 6 of the goals where we think our services have relevance and importance. First and foremost is poverty alleviation. We need a world not just in which, though, we're alleviating poverty, but where we're giving people pathways to prosperity. And one of the best ways to do that is to introduce electronic payments into society. We know that cash is the cholesterol that's clogging up economic activity. If you give a person, a human being, access to a bank account and ability to use it, you give them the ability to interact in this emerging digital world. You give them the ability to save and to get a little bit more resilient to deal with some of the challenges and disasters of life, and you give them security. You give them finally a chance to keep their assets in a safe place where cash is unsafe, right? So poverty alleviation and moving to a pathway to prosperity is a huge part of it, and the SDGs help frame that for us. But frankly, a lot of our inclusion work is about empowering women as well. Women are the savers in societies around the world. If they don't have access to a basic financial account, then they're not able to save in a secure way. And so we've seen a variety of places where our work can help drive the SDGs. And I'll give you one third example. Hundreds of millions of smallholder farmers around the world have real challenges in getting their products into market. We've built, as part of our inclusion efforts, a terrific platform called Tukuze in Africa, which is really it's a digital platform, so it's building on our digital experience as a company, and it's being used to help get good pricing and exchange of goods for smallholder farmers in Africa. So the kind of thing that we would do in the United States, we're doing in that context, and that's another one of the Sustainable Agriculture SDG where we can be supportive.
So no, that's a lot. That's a ton of stuff. And
Yeah.
you're doing a lot, and it seems like the goals have helped kind of structure the thinking.
That's right.
Tell me a little bit about why that the SDG framework and the UN kind of matter in this day and age. I mean, I think there's some that are saying, with everything so kind of spread out and decentralized with technology, do we really need kind of a central point or central focus? But maybe talk about why if so, why you think that the SDGs and the UN matter.
Well, look, the UN matters because the absence of the UN would be unacceptable. You need a framework by which the nations of the world can come together and talk about common issues and common challenges. And I think the SDGs offer an enormous service, and they give us now all a common framework to talk about issues. And so I think the UN as a collaborative body, as a body that encourages public-private partnerships, has been hugely powerful. Solving the issues of financial inclusion really requires two things, or three things. It requires good policy. It requires close engagement from governments. Why? Because governments have such an important role to play in the economic life of citizens. If governments aren't paying payroll benefits or social benefit disbursements electronically, then they are hurting their economies and their consumers. And their scale and working with governments to do those things is an enormous aspect of the work that we do, and is really helping to drive a lot of the progress in terms of inclusive growth and giving people access to financial services. So sponsoring public-private partnerships is really an important part of what the UN does. It can't be the only way to solve these things. We really believe the future also includes private companies working together to help drive inclusive growth. And so private partnerships need to be added to the list. But the fact that the UN is there providing this overall framework is critical. And we hope that the dialogue can evolve over time to include public-public, public-private, and now private-private partnerships. We've done an extraordinary piece of work with Unilever in Kenya called the e-Distributor Program, which is another example of financial inclusion. Unilever, as you know, distributes through literally thousands of small shopkeepers around the world. A lot of that system is in cash. It's expensive, it's insecure. They wanted to digitize their distribution chain. We wanted to give electronic payment solutions to small businesses in the developing world. We worked together. Unilever's providing some trade finance. We've provided a digital payment platform. And now the whole thing is streamlined, and we're seeing some really good results. We want to scale it. That's an example of private-private partnerships that we think can really change the game going forward. But again, the UN framework is critical to do that work and to align it.
Yeah, interesting. Earlier, you mentioned that your role is focused focused as well on technology. I'm sure technology plays a huge role in all the initiatives that you're describing. Yes. The walking around Davos and going in and out of sessions, there's a number of buzzwords, tech buzzwords. Yeah. Things like AI, but also blockchain. You see it everywhere. Right. How is MasterCard thinking about blockchain? Maybe for the audience and a bit for me too. Explain what it is. Sure. And what's the potential? And does it have potential in financial inclusion?
Yeah, it really does. And so let me give you a little bit of the frame, right? Yeah. So the current systems for consumer payments around the world, of which MasterCard is a major player, have historically been very secure and very convenient. And they've worked really well for consumers, and they've frankly been hard to displace because they do work so well. The reality is we are now seeing more transformational change in our industry than we've seen in 50 years because of these new technologies coming in. Blockchain and AI are two of them, but there's others as well. The simple fact of the mobile device and this ubiquitous, incredibly powerful computer in everybody's hands. Biometrics, being able to identify not just with a signature or a PIN code, but your face or even how you interact with your phone. There's a ton of technology coming our way, and our view is for consumers, whether they're underserved consumers or people like you and me, we have to make sure that we're not just relevant, we're providing better and more secure solutions that are embracing these new technologies. And so we're in biometrics, and we're working hard in scaling digital wallets around the world. We're investing in a whole new system of technology for e-commerce payments globally called tokenization that sits behind your mobile device and makes it secure. And we're powering a lot of the wallet solutions that you see in market today. So Apple Pay and Samsung Pay, even Facebook's push payment services are all using MasterCard technology riding underneath them. So we're proud of that work. It's hard work, but it's critical that we embrace this digital future because the opportunity is vast. And frankly, you have to because new competitors are coming in, right? So it's just a matter of strategy and survival. The two words you described, the two big words here, I think do have enormous opportunity for the future. Now, whether all of the buzz is real, almost certainly not. But here's what I think is important. The systems that we operate in today are generating enormous amounts of data. That is transformational in human society. Never before has that happened. And what I view AI as most important is it's using computer-driven insights to mine through that data and to create better services for human beings. That's really, to me, what AI is about. So, and it's something as simple as knowing how you, in our business, knowing how you interact and spend your day so that we can identify you better and make payments more secure. So we're using AI in our business. We use it to help secure the payment system and make it better in a deep way, and we're going to continue to do that. Blockchain.
Yeah, because I think a lot of people think of blockchain and Bitcoin and MasterCard, like how does that fit together for you
Yeah,
guys?
so there's sort of a lot of people say, isn't blockchain going to sort of make you irrelevant? I don't think so. So the underlying technology of blockchain is incredibly powerful. That's the distributed ledger. And very simply, it's a bunch of computer code that I don't understand, but it basically is a decentralized system for allowing trusted transactions to happen between parties. Usually, to get a trusted transaction, you need a central intermediary, a bank, a central bank, a securities exchange. Blockchain lets that happen in the code and confirm transactions without a central intermediary. It can be very powerful, very enabling. It's technology we're going to use and embed in our system. That's also but that's very different from sort of Bitcoin, the asset. Yeah. And that, I don't really have a view on. I'm not investing in it. It's really speculative. It's not the same thing. It's an expression of blockchain, but it's not the same thing. And we do need to keep the two distinct. The underlying blockchain and distributed ledger technology, hugely important. Bitcoin, get in it if you're interested.
Hear that? No, that's really helpful because I think you're right. We've seen a lot here in Davos, and I've talked to a lot of people here that say, like, I'm not really sure what it means and why we're seeing all this blockchain stuff. But I think that's a good clarification. It's sort of blockchain is the underlying foundation for potentially the future way payments are made.
Future way payments, future way any kind of transaction is recorded and trusted.
And what does that mean for the developing world and for financial inclusion? Will that make things easier? Will it make things less secure? Will it be something that only the rich world and the global elite here in Davos are keyed into?
It's a great question. I think there is a risk that these emerging technologies are only for the developed world and only for the elite. And we have to resist that. We have to resist satisfying ourselves with a two-tier world where all have access to some and some have access to a lot more, right? So that's something to resist. And I think this actually is a place where, in Davos, where those conversations happen and we can make progress. I do think blockchain will have a role in financial inclusion and in the developing world. I don't know how that's going to play out yet, but there clearly are some problems that it can help solve. And I'll give you one example. We know from our work that one of the most critical challenges to financial inclusion is the lack of formal identity in countries around the world. If you don't have a formal identity, you don't have access to a passport
like an
or a card,
or driver's license.
You can't interact in the modern economy, and those are real challenges. Some countries have really working hard to solve it. The Indian government's done an amazing job bringing formal identity. South Africa has done so as well, but it's a big problem in a lot of places. I could see blockchain playing a role in that. It becoming the store of identity within a country, and then people being able to access that perhaps through MasterCard or other systems in order to transact in commerce. There are some, I've met actually a startup here in Davos that's actually working with MasterCard that's thinking about just that thing. It's called AidTech, pretty cool thing. They're going through our Start Path program at MasterCard where we help new companies innovate, and I really wish them all the best. It's an example of how blockchain could be used to solve financial inclusion problems. The speculation of Bitcoin is probably not good for that, but again, the underlying technology can be really useful.
Earlier you mentioned MasterCard Center for Financial
Inclusive Growth.
For inclusive growth.
Yep.
Which I think is really interesting that MasterCard is doing something like that. Talk to me about why and why it's important for a company like MasterCard to think socially and think about being socially responsible as a big corporation.
I think it's very simple. Our CEO Ajay Banga, who set up the center and has really been a driver of this whole area for us, always talks about doing well and doing good. And I think both of those things are true, and they're really the answer to your question. We have the Center for Inclusive Growth because the theme of Davos this year is fair. The world is fracturing. people are appropriately looking at large companies to play a role in solving some of the world's problems. We can't be successful if the world is broken, and so a little bit of the money we make, a little bit of the investment we make needs to go into long-term thinking that supports solving some of the world's problems. So that's the doing good piece. But frankly, it's also about doing well. The core insight is really just this simple. Middle-class people use MasterCards. We want more middle-class people in the world. We want rising middle classes because they become the long-term customers for us 20, 30, 50 years from now. And frankly, some of this work helps support that as well. If we can get robust consumer electronic payment systems bedded into economies, we can help them grow. It can be a good business for us over the long term. So that's part of it too. And both of them have to come together, because unless we find ways for companies to earn appropriate profit supporting the rise of middle classes, you will not get the scale or the innovation of the private sector working. It can't. The world's problems are too big just for charity alone, which is why those private partnerships I was talking about are so important. And people still struggle with that and finding the right balance between regulation and transparency. But we've got to get at this, because I think that is really the way places like Davos, and certainly the kind of work we can do at MasterCard, can actually make some good things happen.
So the importance of doing not just charity, but doing well by doing good, I think it makes a lot of sense. And I think too, this point about corporate leaders and private companies playing a bigger role in making sure that the world is not as broken and fractured. So it's great to see that happening. Tim, thanks so much for talking with us. I think that's it for this conversation on financial inclusion. Thanks for watching. Stay tuned to the conversation with #SDGLive. You can also see other videos at sdglive.org. Thanks very much.